Hello, everybody. Welcome to the special business meeting for the District of Squamish. Today is Tuesday, May 6th. Holland Squam plus Tukma plus Squamish Oakmail. As always, we're gathered to do our work today on the traditional and unceded territory of the Squamish Nation. Please be advised this council meeting will be live streamed, recorded, and will be available to the public to view on the District of Squamish's website following the meeting. If you have concerns, please notify the corporate officer present at the meeting. Can I have someone move adoption of the agenda? Moved by Councillor French, second by Councillor Hamilton. All in favor? Any opposed? Motion carries. Thank you. So our first order of business is the 2024 audited financial statements. I'll turn it over to our staff to run us through the presentation.
Good afternoon, Mayor and Council. My name is Rianne Sousa, and I'm the Director of Financial Operations at the District. Joining me today is the District's Auditor from BDO. Please welcome Paul Fripp, BDO Audit Partner. I'm here today to present the District's 2024 financial statements for Council's review and acceptance. For Council and the public's background, the Community Charter of BC states that the financial statements must be presented to Council for its acceptance and the financial statements sent to the municipal inspector before May 15th of each year. Further to this, the municipal auditor must report to Council on the audit review of the financial statements. Key elements to highlight are: the auditors concluded that the consolidated financial statements present fairly in all material respects the financial position of the district at December 31st, 2024, in accordance with Canadian public sector accounting standards. Consolidated within the district's financial statements are the Squamish Public Library and the Squamish Sustainability Corporation. The district's financial statements are within the approved financial plan. I'll now move into the significant variances on the consolidated statement of financial position in comparison to 2023 results. The statement of financial position can be found on page 1 in the financial statements. Cash and cash equivalents have increased by $8.6 million. The increase is primarily due to the issuance of temporary borrowing for Fire Hall number 2. Accounts receivable has increased by $4.4 million. The increase is primarily due to grants receivable for the wastewater treatment plant upsize and the Brennan Park retrofit. Accounts payable has decreased by $4.4 million. The decrease is primarily due to servicing agreement deposits that have been returned, and the QP collective agreement retroactive payments have been paid for 2022 and 2023, which were pursuant to the collective agreement being settled. Deferred revenue has increased by $2.4 million. The increase is primarily due to the implementation of the new public sector accounting standard for revenue recognition. The implementation required some revenues such as servicing agreement, building permit, and application fees to be deferred, whereas prior to implementation of the standard, they would have been recognized as revenue. Developer cost charges have decreased by $2.6 million. The decrease is due to utilizing more developer cost charges than were collected. Significant projects that were funded by DCCs in 2024 were $900,000 for the Oceanfront Road, referred to as R20, $500,000 for the oil grit separator, $870,000 for the Oceanfront Park, and $1.2 million for the new reservoir. Asset retirement obligations has increased by $1.2 million. The increase is due to the revaluation of the landfill post-closure expenditures. Debt has increased by $7.5 million. The increase is primarily due to the temporary borrowing issuance of $12 million for Fire Hall number 2, which is offset by debt principal repayments throughout the year. Continuing on with the consolidated statement of financial position, tangible capital assets represent the cost of assets less accumulated amortization. There's been a 55.1 million increase to tangible capital assets. The accumulated surplus balance is primarily represented by 384 million investment in tangible capital assets, 77 million in statutory reserves, and 18 million in non-statutory reserves, which are also referred to as provisions. I'll now move into the significant variances in comparison to the financial plan on the consolidated statement of operations and accumulated surplus, which is page 2 in the financial statements. Other property levies are 700,000 greater than the financial plan. The increase is primarily due to the BC Rail grant in lieu of taxes was greater than budgeted. Utility user fees are 640,000 greater than the financial plan. The increase is primarily due to approximately 250 new accounts that were added throughout 2024. Other revenue from own sources are 800,000 less than the financial plan. The decrease is primarily due to the implementation of the new public sector accounting standard for revenue. The implementation required some engineering servicing agreement fees to be recorded as deferred revenue, whereas they were budgeted as revenue. Government transfers for operating are 2.6 million less than the financial plan. The decrease is primarily due to 1 million of grant funding was not received for the agri-food implementation. 1 million of grant funding was not received for innovation capacity development, and 600,000 less than planned CMHC grant funds were utilized due to project expenditures being less than budgeted. Investment income is $4.4 million greater than the financial plan, as only interest earned on working capital was budgeted, whereas actual results include revenues earned on reserves and provisions. To note, the interest earned on revenues or on reserves and provisions is transferred to those respective reserves and provisions. General government expenditures are 2.1 million less than the financial plan. The decrease is primarily due to special projects or 670,000 less than budget. 250,000 of the legal contingency was not spent. 150,000 of maintenance work has been delayed as the result of staff vacancies, and 110,000 of salaries and benefits were not spent due to staff vacancies. In addition, as the result of capital project delays, short-term borrowing was not required, which decreased interest costs by 790,000. Transportation and transit expenditures are 755,000 less than the financial plan. The decrease is primarily due to special project delays or cancellations. Economic and community development expenditures are 4.2 million less than the financial plan. The decrease is primarily due to special projects that are delayed or cancelled, notably grants for phase 2 of the agri-food implementation and innovation capacity were not received, and therefore the projects did not proceed, which totaled $2 million. In addition, the major projects, industrial project and CMHC funded expenditures were 1.1 and 600,000 respectively less than budgeted. Wastewater services are 520,000 less than the financial plan due to special project delays and short-term interest costs being less than budgeted, as internal working capital was utilized to temporarily fund capital projects in order to delay debt issuance. Government transfers for capital revenues are 22.9 million less than the financial plan. The decrease is primarily due to delays in grant-funded projects, such as 13.5 million for the Brennan Park retrofit, 3.9 million for the Jimmy Judd Slough dike raising, 3.5 million for the Winnaick Park Sea Dike, and 1.4 million for the wastewater treatment plant upgrade. Developer cost capital charge capital revenues are 4.3 million less than the financial plan. The decrease is primarily due to the delays in capital projects, such as 2.3 million for the new reservoir, 1 million for oceanfront shared stormwater mains, and $600,000 for the Victoria Street bike lane. Developer contributed assets are $24 million greater than the financial plan, as developer contributed assets are not budgeted. Other capital revenues are $1 million less than the financial plan due to delays experienced for the Brennan Park HVAC upgrades, which were budgeted to be externally funded. On the consolidated statement of operations, the district has realized a surplus of $64.5 million. The rationale behind the surplus is the legislated calculation for a balanced budget in the financial plan is calculated differently than the annual surplus in the financial statements. The financial plan recognizes sources and uses of funding that's not recognized in the consolidated statement of operations, including capital expenditures, borrowing, proceeds, principal repayments on debt, and various transfers to and from reserves and provisions. The financial plan also eliminates amortization on tangible capital assets. Lastly, in 2019 and 2020, the district assumed ownership of 2 culverts that were built by the Squamish River Watershed Society. The culverts have a total value of $1.6 million. As these had previously not been recorded in the district's financial statements, they were recorded in the 2024 financial statements. The impact on the 2024 financial statements was a $1.6 million increase in tangible capital assets on the consolidated statement of financial position, which is a 0.4% of total tangible capital assets, and a $1.6 million increase to developer contributed assets revenue, which is a 0.3%, which is 0.3% of accumulated surplus. The recommended resolution is that council receive and accept the 2024 consolidated financial statements as presented by Financial Services on May 6, 2025. This concludes the presentation. I'll now turn it back to the chair.
Thank you very much for the presentation. Council, questions? Councillor Penigal.
Yeah, start with an easy one, I think, and just for the public's clarity, the developer cost charges, and just to put a fine point on it, those being lower, that's not because we're charging less on a per project basis. Developers, when they develop a project, are still paying a comparable amount. It's just that we spent a lot more from the developer cost charge account than we received in income this year. Is that what that?
Through the chair, yes, you're correct.
Okay, and this one's a little harder because I may be using some of the wrong terms, but a couple years ago, we approved a policy that if there was a surplus, and I think there's a qualifier about what type of service, we put it into reserve, and I can't remember the name of the reserve. And so that's the context for this question, where there's a number of things like carry forwards or delays and so on, causing a surplus of some sort. Is that money, like when something's canceled or delayed, going back to the funding reserve? Like most of these are coming from reserve in the first place, so is it going back to that reserve, or is it going to this other new reserve, to this policy? Or can you explain, like, when we say surplus, what part of that surplus is going to this new reserve as per that policy?
Thank you for the question. Heather Boxer, General Manager of Financial Services, IT and Procurement. Thank you for the question. So the reserve that you're speaking about is the general operating reserve. And so only surplus that comes from operations goes into that reserve. There's a number of items that we've earmarked in the policy for that reserve as well. So the HR contingency, so it's allowing a bit of a contingency for HR settlements. We've got a legal contingency in there, as well as you can use tax stabilization and emergency expenditures. So in terms of your question around when a capital project is delayed, those monies will actually go to that particular reserve in which it was funded, not the general operating reserve.
You good for now, Councillor? Other questions? Councillor Stoner, go ahead.
Thank you. Through the chair. To pick up on surpluses, accumulated surplus, I feel like that's something I ask you about every year, but can you further explain how, like, the accumulated surpluses? And so in the audited financial statements, it says we have $465 million in accumulated surplus. We're not holding $465 million that we've taxed folks for. Can you just explain how that works? And that's on page 20 of your staff report, or 28 of our agenda.
Through the chair, in the notes to the consolidated financial statements on page 12, there's a note number 14 that details what's in the accumulated surplus. So what the accumulated surplus is comprised of is statutory reserves. So that's 76.7 thousand that the district is holding in statutory reserves. Non-statutory reserves, so provisions, which is 18 million that the district is holding. And the largest piece is equity and tangible capital assets. So the monies that have been spent on tangible capital assets show as accumulated surplus less the debt that's owing on that. So no, that is not monies being held by the district.
Okay, that's helpful. Thank you. And then sticking on the reserves for a second, page 29 of the staff report has a list of the continuity of reserve schedule 3. And there's a few that jumped out at me. And I'm just wondering if you can explain what they are for. One is the Environmental Reserve Fund, and then the other one was the Carbon Neutral Fund.
Thank you for the question. Through the chair, we'll actually just pull up the bylaws so we can give you the exact explanation.
Great, thank you. While you're doing that, can I ask another question? In your summary, there was it showed a decrease of 22.9 million in government transfers to capital, and I just want to confirm that that is not that we are not receiving that additional $22 million. It's just that we're not accounting for it until such time that we spend it. Is that correct? So those grants are still coming forward, but they're just delayed in the spending.
Through the chair, just one moment, and I will respond to that. Through the chair, yes, you're correct. That how government transfers for capital are recognized on the financial statements is for the grants that we're expecting to receive. So GICB for the Brennan Park retrofit, the grant funds for the Jimmy Judd Slough dike raising, and the Winnaick Park sea dike, which comprise the majority of that, is we can't recognize as revenue in the financial statements until the expenditures are incurred. So it's not that we won't receive that monies, it's just the expenses haven't paced at what was budgeted.
Okay, that's helpful clarity. And then I had one other question in terms of the grants in lieu of property taxes or property levies. Do we have policy around where that gets allocated? Or does that just go into general government?
Through the chair, it just goes into the general government revenue.
Would there be any consideration for adding policy around that, similar to what we've done for like revenues recognized for forthcoming revenue from wood fiber, for example, where grants in lieu of taxes are not really consistent to account for? And so would we ever consider putting policy around how they get utilized?
Through the chair, I mean, I think we would consider policy if there was a significant volume. At this point in time, it's quite low in terms of volume. So, and it's pretty consistent year over year. Yeah, so I think if that were to be the case, we would certainly consider it.
Thank you. Other questions, Council? Anyone? Okay, we've got We do have a recommendation before us if we're there. Are you ready to move that? Councillor Hamilton moves, Councillor French seconds. Would you like to speak to it?
Once again, thanks very much for the hard work putting together our audited financial statements. I find it very interesting that the difference between legislative definitions of budgets balancing and financial definitions of budgets balancing. So thanks very much for all the hard work on this and keeping all of our numbers in tune. Thanks.
Thank you. Councillor French? No. Just speaking in favor of the motion, thank you very much for the hard work on this, both kind of all the way through from budgeting to this phase of sort of wrapping it up and looking back at what had happened. I appreciate that we've had some changes in the accounting standards, and I think that those changes are a little disorienting sometimes as to what. But when we're looking forward to that point where those have been incorporated, we can start comparing year over year more. And I know this is no fault of anybody in this room if that's the case, but those transitional times can be challenging. So thank you for working through that, and happy to be on the other side. So I'll call the question. All in favor? Motion carries. Thank you very much, everybody. Council, I'm looking for a motion to close, please. Moved by Councillor Greenlaw, second by Councillor Hamilton. All in favor? Any opposed? Motion carries. And we're going to take a recess. 15 minutes, I think, is what we need, and then we'll return in the close. So we will need the closed link, everybody, when we get there. So we're recessed 15 minutes.